Okay, I'm going to do a quick wrap up of the trades from the last 24 hours or so, going back to about Wednesday. So, actually, let me change the page. I apologize. This is for coaching students before I go any further. If you're watching this video, again, this is just a recap of the trades that we've executed for coaching students in the coaching program. And then if you're watching this, this will give you an idea of what's going on. If you are a coaching student, I want to make sure that because of the holiday, if you missed anything, we're going to recap exactly what we did. That way you know exactly how the trading system is working around the holidays. I think it's really important to be aware of things like that. I apologize for that. I think it's really important that you understand the trading system around certain holidays, and then even though we record or document what happened this 4th of July holiday with the volume ranges the way they were moving in such a tight range over the last couple of days, that doesn't necessarily guarantee that next year it's going to do the same thing, right? We watch to see if it's going to be that way, but that's why we use the Fibonacci Trader system, trade system inside of the platform, the charts, so that way you get notifications. And then, of course, I'm sending out this. This is information for those of you who are considering coaching, but I also send out notifications to my coaching students. This is far and beyond what we do in the chat room or with the trade copier. This is far and beyond. So we're going to review some of the trades and exactly what the details were of the trade alerts that I sent out over the last 24 hours or so when price was breaking out. So let me pause this. I'm sorry that I'm speaking so fast. I'm traveling to go back home today so that I can catch up on work and we can get ready to start trading for Monday. But give me just a moment here. Okay, so we're going to pick up with the trades that we've already closed. So let me go back to the euro dollar. The euro dollar was also a trade that I had opened earlier in the week. So very often with holidays, so we're going to review this really quick. I don't want to keep repeating the same thing because all of you have already seen it, especially with the updates. But so we've got the range of consolidation. That's always really important, right? We need to find the right highs and the right lows. So we've got a range of consolidation, and then we wait for the break. Now, again, and I've repeated this many times, every time we go through a holiday like this is what we could normally expect. It just doesn't necessarily mean that it's always going to go down that way. We just have this idea in the back of our mind, and then we follow along with each one of these candles to confirm that it's actually doing what we expect it to do. And then that tells us what we need to do as far as our behavior, whether we should be executing trades or not, and what type if we are. So normally, I'm going to bring the charts in here. This is the euro dollar. We're going to go all the way back to where it started to collapse. We had a continuation breakout trade and then another. And remember, every time we see these continuation breakout trades, when they're 100% qualified and confirmed, if we see multiple continuation breakout trades, we know eventually it's going to hit a support low. And one of these continuation breakout trades isn't going to work. It's going to run in, maybe work for like, and pay 20 to 25 pips and then stop and go opposite direction. And then if you hold for that 55 pip target, you could get stopped out. And it really comes down to this. This is a trend that's been in place for a little while. We've got to find the most significant support lows. When we start trading multiple continuation breakout trades, let's say the second or the third or the fourth one, at that point, that's when we know we start scaling out. Now, this is something, again, if you're not a coaching student and you're watching just some of my trade copier analysis videos, you don't normally hear me talk about this, scaling out. This is a way that I protect myself when a trend is likely to reach an ending point. It's another way for me to identify when it's likely to happen, or to sit up and pay attention and say to myself, hey, there have been multiple continuation breakout trades in this direction. Every time I find a continuation breakout trade, I'm asking myself, is this the first one, or were there previous ones, and have those previous continuation breakout trades already hit their final target? If they have not reached their final target, then I'm okay. If it's the first one, let's say, and then I find a second one, because sometimes that'll happen. So in this instance, you can see that, again, if we tighten up the charts even further, we can always go back to there was the uptrend from a few weeks ago, then it goes sideways, and then it starts to break down, and now it's coming all the way back down to support again. So now we know that this was, or these were, the first few continuation breakout trades. There was the first one. This one was on the, I get that date there. That was June 30th. And then we get another continuation breakout trade, which was this week. It was last night after all the fireworks. So that's how I look at it, because that's how I was staring at the charts. I knew that once we came in, my family and we were done with the fireworks and all the events around the lake. We came inside, and then my alarms started to fire off because we got another continuation breakout trade. So again, let me go back over here. There's our continuation breakout signal candle right there. So 3 pip entry. So back to the alerts. So coaching students get these alerts. When these triggers fire off, they're notified where the entry is, the pair, the target, and the stop, and then the time. Because this platform and using this system that all coaching students use, there's also an arrow just above this signal candle, and it reads sell, how many lots, and that tells you where your entry is. So it tells you the direction, how to trade it, even if I don't send you the update, but I send updates as often as possible. I mean, obviously there's going to be times as a human being, I'm just going to be missing those. So again, that's why you fall back as a coaching student using the trade system with Fibonacci Trader Charts. So Fibonacci Trader Charts is the only one that I offer that trade system with. I don't use it for MetaTrader platform. I know MetaTrader platform is easy, but there are some real limitations. And I say this year after year. I mean, for the most part, I really don't like MetaTrader. I just use it because everybody else is. There's nothing wrong with it. It is a free software program, and this is going to give us much more depth. It's going to give us a lot of more features, and that's why you want to be using this through the coaching program. Only coaching students get this particular program that generates the signals on the trades. So this hit its final target. 1.1206 was the final target. It went to 6. That's exactly where it stopped. So this was sitting here before it even went down there to the 6, and that's exactly where it stopped. And sometimes it'll do that, and that's why I'm going to remind coaching students here, again, it's critical to get paid. Pay yourself. The plan is 55 pips from the entry to the final target. And if you're sitting there with your hands on the mouse and it goes down to 7 or 8 and it looks like it stalls just for a moment, even if you're just a little bit suspicious, it's okay. Take it. This is a hell of a great trade. We're trading standard lots as coaching students. So you're making a lot of money on this trade, and there were 4 continuation breakout trades that have already reached their final targets. We've already picked up 220 pips, not including that little breakdown when the euro dropped down and paid as it was taking out that low, because that's what led into the continuation breakout trade. So remember, when you see that 55 pip take profit target, take it. If it falls to 7 and then bounces up and you're afraid of it and you're there manually, close it. There's nothing wrong with it. There's nothing wrong with getting out a couple of pips ahead. Usually, they're going to go a little bit further, but sometimes they don't. They stop right at that 55 pip take profit level. We see this over and over and over again. It doesn't happen all of the time, but we see this often enough to know and to remind yourself that if the plan says 55 pips, that's your profit target. Lock it in. Even if it looks like it's strong and it's going to go another 20 more pips, and that's what you want. It doesn't even matter. It's not what you want. It's what the market's going to provide and what it's going to do here. Remember, and I say this all the time, with the continuation breakout trade and all of these techniques, I spent a lot of money and a great deal of time scientifically testing this. I know how far it's likely to go and where I can lock in those profits before I end up getting to the point where I'm holding onto the trade too long and then it reverses and goes back the opposite direction, and then I give back all of my profits. When I first developed this trade system, the continuation breakout trade, I used to see 40, 50, 60 pips in my trading account. And then I would think, okay, well, this is awesome. Maybe I can get 80 pips. Well, 80 pips was always too far. Sometimes it'll go, but usually it'll do just this, or maybe just a little bit further. Even if it's 10 or 12 pips further, it still needs to be closed at that 55 pip take profit level. But let's compare this one to the pound dollar. The pound dollar paid to its 55 pip take profit target. That was at 85, and this one went down as low as 80. So this one went 5 pips lower, but you can't take that for granted. You've got to lock in these profits. You're putting in all of this time. Like I watched it from Tuesday, Wednesday, Thursday. You know, I would have much rather have been spending all of that time without even worrying about the markets and looking at my phones and making sure that my office was set up for my charts so that if there was any kind of breakouts, I was notified. I would much rather close out the charts. But what I'm getting at is you're going to be putting in all that time. If I'm going to be putting in that much time and that much commitment, then I've got to get paid for my time. That's why I always lock in these profits. I know that sometimes they're going to go another 10, 15, 20 pips. I know it happens. It happens. Sometimes if it's news driven and I'm there and I can see and it's really obvious, because sometimes it really is obvious that it's going to go another 10, 15 more pips or maybe 5 pips. It's okay to let it go if you're there and it pops a little bit further and you grab the extra 5, 6, 7 pips. That's okay. There's nothing wrong with that. The plan is, though, you've got to lock in those profits. Got to get paid. So let's take a look at this one. I'll bring the charts back into line. Again, same range of consolidation on the pound dollar. There's the breakdown, and then we get our continuation breakout trade. Everything lines up perfectly. Again, we use 3 indicators here. The Bollinger Bands to identify the breakout and confirm that there's that momentum, that there's a lot of volume and a lot of pressure built behind that. And then we look at the next indicator is the CCI indicator. It's set at 14. And then the MACD histogram, just for an extra level of confirmation. And then, of course, we're paying attention to pivot points. The other trade was the dollar yen. The dollar yen moved really nice. Continuation breakout trade. Let me go ahead and put this one up here at that resistance point. That was the continuation breakout trade. Breakout right here. 55 pip take profit at 108.53. All of these were sent in the alert with the take profit level, so you know exactly what to do if you see it. And for some reason, let's say your excuse me, your charts aren't on. But if your charts are on during the week, you know you're going to get the signal anyway if you're using the system on the Fibonacci Trader charts. Now this one went as high as 61. So a little bit further, and it's probably going to continue, and it's probably going to continue maybe on Monday when we get that little pop on Monday. It'll probably push up a little bit higher and then flatten out. I don't know if I'm going to participate in the rest of that move, but it's hit its 55 pip take profit target on these, so I'm done with it. That's how I look at it. I look at it as I'm getting paid, I'm done with the trade, that trade's done. I don't care what it does next. I've got to reset and then wait for the next opportunity. So if I'm going to sell this, I need to wait for it to top out and then get confirmation. I don't usually pick the first reversal at resistance or at a high, because that's, like, in my opinion, picking tops and bottoms, unless there's something else that's going on beforehand, like that 3 pushes to a high method that we use. But I'll talk about that because we're not even in another video, because we're not even looking at that here. So I don't want to confuse anybody on that. The other trade was the Australian dollar. So we had the pound dollar, the euro dollar, the dollar yen. All of those have hit their 55 pip take profit. The Australian dollar hit its 55 pip take profit. The target was 60, and this one went down as low as 57. Just 3 pips lower, and then it bounced. Now, again, it doesn't mean that it's over with just yet. It just means that, to me, this trade is over with. I'm done with it. So, we're just, at this point, I'm resetting and waiting for the next trade opportunity. Now, the only other trade that I'm probably going to scale out of and manage this one closely is this one here. This is the dollar Swiss, and this was a little bit later, triggering the continuation breakout trade. The target would normally be at about 70, I think it's 79 is the target on this one. So I'm going to watch this, but probably not hold it through the weekend and just take whatever I can once it pushes above that high of 31. So even if I pick up 5, 6, 10, 11, 12 pips, that's okay. I'm done with this trade. And I'll watch it and maybe try to trade it again a little bit later. So let me pause this and we'll take a look at just a few other charts. Now remember, when the yen crosses, the euro yen, pound yen are a little bit choppier. We tend to stay away from them or definitely scale out until they open up. And then the other thing that I want to bring to your attention is, again, when we trade the Australian dollar or the dollar Canadian, the continuation, even on the continuation breakout trades, because of how choppy they are, and usually the move after an economic announcement is like within that hour or maybe shortly after, and then they collapse, we scale out of these, or we don't trade them at all. This one didn't even give me a signal. This is a dollar Canadian. This one didn't give me the entry. So I wouldn't have been tempted to really go long anyway, and there was divergence on this trade. So I would stay away from it. but we know that this is exactly what happens in most cases with the dollar Canadian. Even when we get a signal and a breakout, I'm really particular about it. We'll talk about that the next time we see the breakout trade on the dollar Canadian. But again, if we get into those trades, we're going to scale out. The dollar Swiss isn't so much the same as what I just described with the dollar Canadian and the Australian dollar. This one moves, but it moves like this. It moves on its own sometimes, real slow, real quietly. A lot of people tend to ignore this one just because there isn't that sharp, quick move within 2 or 3 hours. This one can just, it's like that one that you're just not paying attention to, but it still hits its targets. And so again, I'm just going to continue to watch this for probably another 30 minutes or so, and then I'll be closing out this trade as well. So again, 220 pips so far with just the breakouts, not the other trades earlier in the week, just today with the breakouts with non-farm payroll, day after 4th of July. This is awesome. This is great. Big numbers already reporting from coaching students of the profits that they've already earned since Wednesday night. One guy was making a joke about how he's never done and made money during the 4th of July with his family. So this is great. I'm really happy. I'm really pleased. And I was sort of expecting that it would do something like this on a Friday, not necessarily Thursday during the day, but maybe late Thursday after. It was kind of interesting how it all happened when everything settled down with the firework events and just different festive, the events that we have here in the United States. It really, things turned around and went right back to work, and volume levels picked right back up again. And then we had non-farm payrolls, which also helped out. So anyway, again, great trading day, at least 220 pips so far. I'll close this one out. Even if I close it at break even, it really doesn't make a difference. And then maybe we can try and see if this one resumes on Monday. But I'll talk about that in the weekend update. Thank you very much. I hope you had a great 4th of July. I really do. We had a lot of fun, and then making money like this is also a lot of fun. I hope you participated in all of these trades. Remember, keep using the system and keep it open, but if you don't, I send those updates, and if I don't send the updates, that's why the system's there to back you up and show you exactly where those trades are going to start firing off.